इटी नाउ स्वदेश में आज हम बात करते हैं रियल एस्टेट सेक्टर की। रियल एस्टेट सेक्टर में अब अगर आप अपने आसपास देखें तो लग रहा है दैट रियल एस्टेट प्राइसेस आर कमिंग बैक, क्योंकि स्टॉक मार्केट एक फॉरवर्ड लुकिंग इंडिकेटर है। शेयर बाजार बोल रहा है कि रियल एस्टेट की साइकिल रिवर्स हो चुकी है। अगर आप बड़े रियल एस्टेट कंपनीज की स्टॉक प्राइसेस देखें, डीएलएफ, गोदरेज प्रॉपर्टीज़, ओबराय रियल्टी, प्रेस्टीज, सब स्टॉक्स के अंदर अच्छी खासी तेज़ी कुछ दिनों में देखने को मिली है। सो आर गुड डेज बैक फॉर द रियल एस्टेट सेक्टर। आर वी एट द बिगिनिंग ऑफ अ न्यू रियल एस्टेट मल्टी ईयर साइकिल? एंड इस समय क्या ट्रांजैक्शंस बढ़ रहे हैं या फिर केवल इस समय ट्रांजैक्शन के साथ साथ प्राइस के अंदर भी हम देख रहे हैं कि इजाफा और बढ़त देखने को मिल रही है? तो लेट्स डिस्कस ऑल दिस एंड मच मोर, एंड इट गिव्स मी ग्रेट प्लेजर टू ब्रिंग ऑन बोर्ड फिरोशा गोदरेज, एग्जीक्यूटिव चेयरमैन विद गोदरेज प्रॉपर्टीज। फिरोशा, वेलकम टू ईटी नाउ स्वदेश। आपका हमारे चैनल पे बहुत बहुत स्वागत है। इट्स द फर्स्ट टाइम यू आर इंटरेक्टिंग विद अस ऑन ईटी नाउ स्वदेश, सो इट इज़ अ स्पेशल मोमेंट फॉर अस। फिरोशा, लगता है रियल एस्टेट सेक्टर के अच्छे दिन आ गए हैं। लुक्स लाइक हैप्पी डेज आर बैक। हम आसपास देखें तो रियल एस्टेट के ट्रांजैक्शंस बढ़ रहे हैं, रियल एस्टेट की डिमांड वापस आ रही है। तो व्हाट इज़ योर व्यू? आर गुड डेज बैक, एंड मोर इम्पोर्टेंटली आर गुड डेज हियर टू स्टे?
Great to be with you, Nikunj. I think, first of all, congratulations on the launch of this exciting new channel. I think the real estate sector has been long overdue, the recovery we are currently seeing. If you look back, I think it was really last in about 2012 that the sector was doing well. And over that 9-year period, we've seen a pretty significant downturn, and various things have kind of extended that downturn, be they demonetization, the introduction of GST, the introduction of the Real Estate Regulatory Act, and of course, most recently, the pandemic. I think given the kind of time frame that we've had this downturn for, of 8 or 9 years, we do think that now the next leg of the cycle has begun, and that it will last a few years. And again, this is nothing very different from a typical real estate cycle. When things get good, developers tend to overbuild, a little bit of oversupply gets created, and that takes its time to work its way through the system. And on the other hand, when things get tough, as they have been over the last 3 or 4 years, not enough supply gets created. A lot of developers actually go out of business, further constraining supply. Which in turn then leads, as demand picks up, to more tight supply conditions, better pricing. And we think that's the typical cycle that we're going through, and which should lead to a few good years ahead for the sector.
So what is your view? Do you think the inventory only has got reduced, or now new demand is coming for fresh construction also?
Yeah, I think the inventory is getting reduced because of the fresh demand that is coming in. So certainly, I think, while we've not released the results, so I can't get into the details, but we've seen an excellent quarter in the second quarter from a sales perspective. We had a similarly excellent quarter in the fourth quarter of last financial year. And while there was certainly an interruption with the second wave, given the ferocity with which that wave hit us, we do think that over the last nearly 1 year now, aside from the second wave, the sector has been seeing good traction. And I think that is a result of people coming back to the market, people realizing that affordability for the sector is probably the best it's ever been these days, given where interest rates are, given the fact that property prices have been quite flat over the last many years. So we are seeing a lot of new demand come in, and we expect to see that momentum only increase in strength over the next couple of years.
So whatever price uptrend we've seen in real estate or real estate pricing, is that a function of higher commodity prices because steel, cement, everything has gone higher? So the price uptick what we've seen, is that a simple pass-through?
Yeah, probably so far. I think that's probably about right. I don't think there's been any huge price increase across the sector as of now. I think there have been at the project level many projects for leading developers where prices have been taken up. But I would say it's a little bit premature to call it a very broad-based price increase that has already occurred. I think what most people are expecting is that it will continue to build the price momentum over these next 12 months. I think it's important to remember that while the cost impact of commodities like steel and cement going up is important, these form a relatively moderate component of an overall real estate project's cost, because a lot of the project's cost goes into land, regulatory approvals, and things of that nature. So I do think even moderate price increases can offset the kind of construction cost escalations that have been seen. But I think over a 2-3 year period, you're likely to see much more price increase than has already occurred so far, because really the first leg of recovery usually plays out through volumes picking up. And only after volume recovery has shown some strength do prices tend to move meaningfully. And I think we're still in that phase where the volume recovery is gaining momentum.
So what perhaps investors would like to hear from you is that how far are you from taking a price hike? When I say a price hike which will add to the operating leverage and which will add to your profitability. Do you think we are at that point where the natural uptick in real estate pricing will start?
Yes, I think so, Nikunj. It's not unlike a commodity like a car or a soap or something else, which companies can take in one shot a price increase. I think for us, we're operating actually 50 or 60 different real estate projects in different parts of the country. The supply demand dynamics would be different in each of those micro markets. The level of new supply will be different in each of those micro markets. So I think our pricing decisions are really project-based decisions. I would say in the past 6 months, on more projects than not, we are seeing some upward movement in pricing. So for example, last month, we had a very successful launch of a project in Noida where we sold nearly 600 crore worth of inventory on the launch day. Now, this project was actually the second phase of a project which had launched, where we had launched the first phase in March. And we did see a 5 or 6% price increase that was taken from the first phase to the second phase. So I think we are seeing pricing already start to increase. Certainly, this will benefit the bottom line of the company as and when these projects reach revenue recognition. I guess what I'm saying is that it's not the case yet that we're seeing across the board, across all projects, across all markets, strong pricing momentum. We're seeing the beginnings of those price enhancements. But I would say next year is probably a year where you'll see more pricing momentum in the sector. As I mentioned, I think this year will still be more focused on volume recovery for the broader sector.
Pirojsha, Godrej Properties has set a new kind of a benchmark because you follow a asset-light model. Now, your peers are also trying to follow that. So now that growth is back, now that you are excited about how real estate demand trends are likely to move, would you stick to this asset-light model or would you be open to take some more risk?
We have actually, Nikunj, over the last 3 or 4 years already been taking a little bit more risk in the sense that we are increasing the level of investment into land, either by buying the land on an outright basis or even within joint venture partnerships, structuring the partnership such that our economic interest in the project is significantly higher than it used to be. And, our view is actually that the right time to follow a joint venture strategy with staying very asset light is when land prices are booming and when there's a lot of developers chasing the same land parcel. The last 2 or 3 years have actually been the opposite, where I think land prices have been quite reasonable because of the liquidity pressures many developers are under. So we have thought that it makes more sense to actually increase the capital commitments to our projects. And that remains our strategy over this next 12 to 18 months. In March, we actually did a QIP, which was the largest ever QIP by a real estate company in India. So we raised 3,750 crore. That gives us the capacity to invest about $1 billion, we think, over this next year or two into new development or new land parcel acquisitions. So certainly we would like to follow a slightly more capital intensive strategy at the moment because we do think that land valuations are reasonable and that any land that we acquire now will be developed in a period over the next 4 or 5 years when pricing momentum is healthy and where returns should be quite attractive.
The problem for any real estate company, let's say about 5-7 years ago, was that in India the land prices are unnaturally high. And we've debated perhaps this on different forums that makes project construction slightly unviable in a city like Mumbai. Are things looking up? Are land prices now much more reasonable?
I think both land prices and end property prices are much more reasonable today than they were 5 or 6 years ago for a few reasons. One, the financing for that land or for a property purchase can be much more cost effective given where interest rates are. So home loans are now being offered at 6.5%, which was unheard of at any previous time in the country's history. Developers' borrowing costs are also quite attractive. Our borrowing cost at Godrej Properties today is also on average in the 6.5 to 7% range. So, I think that does allow, first of all, a greater capacity to utilize your balance sheet to fund these land purchases. And also you've gone through a period of, I don't think you've seen a huge reduction in land prices or property prices, but you have gone through a period where they've stayed flat for many years and sort of have therefore gone through a kind of time correction, if you will. So we do think it's an attractive time in that sense, both for an end home buyer. I don't think it's going to get any better than this from an affordability perspective, and also from an opportunity to acquire land parcels at reasonable valuations. I wouldn't call them by any stretch distressed valuations, but we do think there are good, reasonable valuation opportunities available at the moment.
I respect the fact that it's a quiet period for you, so we won't get into specifics, but we can always go back and look at the last cycle. The last cycle, when it came in India and especially in Mumbai, it was a multi-year cycle. Prices went up exponentially and there was no RERA and there were multiple builders and small projects were on. Now, because of RERA, there is a massive consolidation which has happened. You can count on your fingertips how many good builders are there. Forget Mumbai, but on an all India basis. So now that cycle has come back because of this consolidation, how does life change for you?
Yeah, I think, Nikunj, this consolidation story is something that's been very evident in the sector, not just in the last year or two, but really the last 5-6 years. It's clearly something we've benefited from. Over the last 6 or 7 years, we've seen the size of the industry actually contract by as much as 50%, whereas our own sales have more than doubled over that period. So you've seen a 5x level of market share already than we had maybe 5 or 6 years ago. I think last year, for the first time, we were the largest developer in the country, both by the value and volume of residential real estate sold. Despite that, we estimate our market share in the very low single digits. So I think that speaks to the level of continued fragmentation that exists in the sector, and of course speaks to the opportunity for consolidation that exists. And certainly our goal is both to ride the wave of improved sector performance that we expect given the cyclical term that is underway, but equally to make sure that we are at the forefront of market share gains. We have a zero net debt balance sheet at the moment with a lot of capacity to invest. We have an existing strong profile of projects that we can launch. So we see no reason, if we execute well, that we won't be able to significantly increase market share and really fully maximize the opportunity that the consolidation you described is presenting at the moment.
So if I say that Godrej Properties is about to enter a high growth phase and growth on a large base also would be higher than last 3 years, is my assessment right?
Certainly that's the hope, Nikunj. I think obviously in this sector there are a lot of unknowns, and you have to be quite agile and responsive to what you're seeing in the market. But yes, certainly I think we've set ourselves up with a strong platform that should allow us to grow quickly. While we've done reasonably well over the last few years, I'd still say the base isn't actually that large. We had under $1 billion of sales last year. I think for a sector that is as big as the real estate sector, and where we are one of the leaders now, I think there's no reason that scale can't be very meaningfully increased. So certainly our aspiration will be to deliver very strong growth in this next 3 years.
I'll talk about two markets and purely your thoughts on the map of Mumbai, which is going to change. New bridges are getting built that will change the commuting time. There is a new coastal zone management policy which has come into place. So what happens to Mumbai and the real estate prices here? It is one of your big markets here, and you are in a better position to explain it to our viewers also, that how real estate pricing in the map of Mumbai will change because of the infrastructure development.
It's quite exciting, Nikunj. I think a big, bustling, growing city like Mumbai does need infrastructure investment. I think both the governments over the past decade have been treating infrastructure development as a big priority, which has been great to see. I think from a real estate perspective, it does a few things. One, it overall boosts the city's economy, which is a benefit for real estate values and demand. I think across the city, it makes Mumbai more competitive and attracts companies to the city. So I think that is something that benefits all parts of the city. Then we, of course, also look at the specific infrastructure initiatives, whether it's the metro, whether it's the Nava Sheva Siuri Sea Link, whether it's the coastal road being developed, and what does that do to specific geographies? And I think clearly, if you have new geographies that would have historically taken maybe 1.5 hours or 2 hours to commute from there to prime areas within the city like BKC or South Bombay, and some of these infrastructure initiatives can cut that time by half or in some instances even more. Clearly, I think the demand in those geographies will pick up. Pricing momentum in those micro markets will be ahead of overall price increase. So certainly one of the inputs we look at when deciding where to pursue new projects, in addition to things like, what is the existing supply and demand, how many other open land parcels are there that could get developed, is how is the infrastructure plans for the city going to impact this micro market? But overall, I think it's a fantastic move for the real estate sector and fantastic move for the overall economy of the city.
Two more questions. What is your understanding on how consumer behavior has changed after COVID? Because we argue about whether the average Joe would go back to office. There is a thought which says that we are working from home and suddenly the need to buy a bigger house or maybe an extra room is there. Do you see these are permanent changes which are happening?
I think so. I think, first of all, the biggest change is that people are now very focused on home ownership. And this has not been a phenomenon just in India, but has been true globally. So whether, the idea of second homes with a little bit more space or larger homes in urban areas, all of those have benefited. Honestly, though, I don't think, as we've done our research, that we are looking at doing anything very dramatically different from what we had been doing before the pandemic. I think the size of one's home is driven mostly by affordability and less by, preferences for additional rooms and things. I think maybe in the luxury category or in the premium category, this becomes more of a consideration. But I think most people were already buying probably the biggest house that they could afford to buy. And I don't think that changes that much. I think there is a role for thoughtful design. Can we look at interesting solutions where rooms can have multiple different purposes at different times of the day? If you have two people living at home, can you carve out small areas where people can do video calls and the like? So certainly, I think our design teams have already implemented and are continuing to look at ideas to facilitate this new world that we're living in. But broadly speaking, it's not resulted in any fundamental change to our strategy, but it's probably added to the confidence that the sector will see strong growth and that therefore we should be quite aggressive with our growth plans over these next few years.
And just to wrap it up with one final question, we are not talking about this quarter or next quarter. In last 5 years, you've dramatically moved outside your core market, which is Mumbai. You're managing 40-50 projects, a lot of micro markets like you mentioned. Will that expansion be continuous, or you've settled and identified the cities that you would not go beyond those cities now?
Nikunj, it's probably a question of the timing. I think over the next couple of years, the focus will be on the cities that we're currently in, because we think the lowest hanging fruit from a growth perspective is to enter more and more micro markets within the cities we're already operating in. And we feel that we're today in a very small percentage of the relevant micro markets in each of these cities. So that will give us quite a bit of headroom for growth. But I think over a medium term, maybe a 4 to 5 year perspective, we do expect that we will also be adding new cities in a meaningful manner, particularly as some of these cities themselves mature and offer greater opportunities to be successfully operating multiple projects simultaneously. So I think it's, in the short term, more of a focus on the existing set of cities, but over the medium term, certainly geographic expansion within the country will be part of the growth strategy.
Well, Pirojsha, so nice of you to join us today. Thank you for your time and thank you for being part of ET Now Swadesh.
Great to be with you, Nikunj, and congrats again on the new channel.